four things that I see affecting oil prices at the moment. You have China slowdown. That was reflected in the IEA demand growth downgrade, which you mentioned. Obviously, Storm Francine, that's hit production on the Gulf Coast there. We see that down 42% as of yesterday. So about 730,000 barrels a day offline. That's given the market a nice little bump. But against that, you've got this supply story, which still keeps coming, and that's driven by OPEC and OPEC's difficulties in getting some of its producers to adhere to the compensatory cuts, which they pledged to. And the primary culprit here is Iraq. And according to the Platts OPEC secondary survey of production, Iraq was pumping 400,000 barrels a day over its quota in August. And when you've got a demand side picture, which is very cloudy at the moment, lots of concern over China, having major producers overproducing, that's a problem. And that's kept a lid on prices.
Yeah, Andrew, I mean, what is OPEC's next move then? I mean, if they can't keep a host of their members in line in terms of doing and adhering to some of these cuts, what's the next thing they could do at this stage? Because prices are bound to get a little bit lower if supply steadies and continues at this rate.
Well, I think we're going to see more talking tough from OPEC, and that'll come down from the Secretary General or through the major ministers. Certainly, they are wanting to put pressure on Iraq to adhere to their compensatory cuts. Other producers like Kazakhstan as well, who were slightly over in our secondary source survey of production. So I would expect more jawboning around tightening up on compliance, tightening up on these compensatory cuts. But again, as the price pressure grows, then the incentive for these producers to pump more oil to make up for that lost revenue increases. So it's a tough ask. A lot of questions are going to be asked heading into that final OPEC meeting of the year in December. I think the big question is, can they wait?
The problem is, Andrew, and you know this better than I did, lovely to see you, by the way, the more they take off the table, the harder it is for them to get their market share back as well. And they know this better than you and I will ever do as well. But the problem is, every time they take a barrel off the table to try and stabilise the price, there are so many non-OPEC players out there who are just desperate and very, very keen to satiate that Asian consumer as well. Taking more barrels off the table, it may be the right thing to stabilise the price now, but it actually isn't going to help them in the medium term, is it?
No, it's not. And I think it's very hard for them to take any more barrels off the table. I think they've gone as low as they can go. I think there's an acknowledgement around that. They put themselves into a corner in many respects, defending this price floor. And at the same time, you've had this continued surge in US production. We're going to have another rise in US production at the end of this year. And you're having new basins come online. We talk a lot about Guyana and what's happening in some of the African producers. Yeah, it's a difficult strategic picture that they've painted themselves into here. It's going to be very difficult for them, though, to squeeze any other producers, especially when you've got some of the major producers around the table, like the UAE, wanting actually the capacity to grow their output. I mean, the UAE investing billions, raising its capacity to, potentially above 5 million barrels a day. At some point, they're going to want to pump that oil.